Hello and welcome to this week's market update. It's November 4th and it's 10:33 a.m. in Central European time. It's going to be a very exciting week with the US election, which is going to provide high volatility, and with high volatility also comes great opportunities to make a good trading return. Of course, there's with any sort of potential profit, you also have potential risk, which will be magnified. So that is what we're going to address in this weekly market update. Now, before we start, as always, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money, and just don't invest money that you cannot afford to lose. That's going to put you on the right side. So before we dig into the US election, let's look a little bit about what's happening in the US and European economy and what's happening with interest rates and what happened last week, because we can use that to understand what's happening today. Okay? So US interest rates are pushing higher. Last week was sort of around 4.20% or so, and I said we can probably push higher to these levels here, and we did. Why did we do that? Because US ADP figures showed that the US economy added very high amount of numbers of new jobs, 233,000 instead of the 110,000 anticipated. US GDP growth in the third quarter increased by 2.8%, which is good. All right. And we also have jobless claims, which dropped to 216K. That's a very low number. We haven't seen that kind of low numbers for a couple of months. Now, the bad thing was that the non-farm payrolls was just 12K. Now, when they do the estimates for the non-farm payrolls, they actually don't contact every company in the US. They just contact a good amount so they can get an idea of what's happening. But we're talking about, like, I think it's like less than 1% or so. So they're not asking, say, 100 companies. They're just asking one, and from these one, we try to understand what's happening in the rest. So I think that's why this number is so weak. The data wasn't just really good, because there is also the unemployment rate, but the unemployment rate, they don't actually ask companies, how many did they hire or fire. They actually call people and ask them if they're working, and the unemployment rate remains at 4.1%. So that, on the other hand, was very good actually. So I would argue that the US economy is doing much better than expected, and that is pushing interest rates up. Now, why should you care? Well, we should care because, number one, it costs the stock market to drop, okay? It costs crypto to drop as well. And it didn't cost the dollar to strengthen though. That's what I would have anticipated. But it seems right now, in terms of data, that good data for the US economy is good for the euro, good for the pound, at least for now. How about the euro area then? So in case of euro area the inflation rate was 2%, which is higher than the 1.1 projected, and higher than the 1.7 seen last time. Okay, so this is much higher than expected. And then you have core inflation, which was unchanged at 2.7%. Okay, so it's a bit higher than expected. And what does it mean for both here? What do we care? It's interesting because interest rates in the US right now is anticipated to be cut once this week for the rate meeting, and then another one in the December rate meeting. So this is far less cuts than the 3, maybe up to 4 that the market was anticipating just 1 month ago. So what can we trade today? There's a few things to trade. If you're trading Aussie dollar pairs, then you want to take a look at the rate meeting on Tuesday. In terms of the US data, on Tuesday we have the ISM services that can move things around, but the big thing is going to be the election. Okay, so because it's such a big country, we won't just get like one result and then we know it. Okay, we're gonna get an exit poll around 9 p.m. London time. Okay, that exit poll is gonna give us a bit of an indication who's gonna win, but it's not gonna be done because when they close for voting in New York, they're still voting in California. Okay, and California is a big state, and they have many electorals which influence the outcome. As well, we have a few other swing states. So it's going to be a bit tricky trading, but at sort of 9 p.m. London time, we get the data out. And then around 2 a.m., so 5 hours later, we have exit polls, most likely from Wisconsin, Pennsylvania, and Michigan. And why do we care about these states? We care about these states because they're swing states. So there's, as you know, 51 states in the US. Now, some of these states are very easy to predict who's going to win. Okay? They know, okay, Trump is going to win, Kamala Harris is going to win. And then you have about 7 of them, which are the swing states. And in these swing states, they don't know. And it's on these states that it's going to influence the outcome of the election. So that data is out around 2 a.m. London time. So if you're in Europe like I am, you're probably going to be sleeping and missing the action unless one is up. But if you're based in sort of Southeast Asia or the US, well, actually, Think Markets doesn't have any US clients. But if you happen to be a US trader, then you can trade this or maybe LATAM. So that's going to be out. And I think after this is going to be the market really makes up its mind, and then it either starts to go up a lot or go down a lot. And then we have a few other things coming out as well. You got Novo Nordisk. That's the weight loss, this miracle weight loss insulin medication. They have earnings on Wednesday. And then you have AMC, which you might remember, Bank of England rate meeting, jobless claims and Fed fund, and then Canadian unemployment. So you have a bit of things to work with here this week. Now, this is interesting. I want you to pay attention to this. So this is Democratic president, Republican president, and so you have the president, and then you have the House, and then you have the Senate. These 3 pieces make the power up in the US, and then you have the judges as well, right? But these are sort of the ones that dictate what's going to happen. All right. Now, what's interesting here is that when the House is divided, which is very likely, or when the Congress is divided, it means that someone controls the House, someone controls the Senate. So the Republicans may be in one and the Democrats in the other one. That means that when the president comes with ideas or the House comes with ideas, the other one can easily block. Okay. Now when that happens, which is quite likely, you end up with a divided Congress. That's what they call it. And when you have a divided Congress, it doesn't matter if you have a Republican president or a Democrat president, the outcome is pretty much the same, an annual return of 13.6%, okay? So it doesn't really matter at that point who's the president. Now, if Kamala would, win both houses, both the House and the Senate, then there's going to be a 9% probability. And if Trump would win, it would be at 12.9. So here you start to get a bit more extremes. But these guys, it seems very unlikely at this stage. It rather is going to be a Republican controlling the House and the Senate, and then maybe Kamala Harris. That means there's going to be a 30% gain, or it might be that the Republicans control the House and the Senate and Trump, and that's when you have as well. So the gains are very, very similar. So with this information, what does it tell you? It tells you that whoever wins, let's just buy stocks, okay? So it doesn't really matter who wins, but it doesn't mean that we can't have market volatility, okay? So with this in mind, what I suggest is literally, I can't suggest because I'm not allowed, I'm not licensed to give you advice, but I can tell you in general, I think people are going to be buying, okay? Now this is interesting. The S&P will on an election year be between minus 40% or plus 32%, okay? So it's a very wide range, but we're already up with about 24%. So the upside is limited. So what probably may happen now in the next day or two is that we might see some profit taking, okay? People booking profits, and then this could potentially, this could potentially see lower markets, but then a dip, I would say. Now, it depends as well who wins. We don't have too much time, and we have an excellent page on thinkmarkets.com which covers the election. But the general idea is this: if Trump wins, it's going to have a bigger impact on the economy versus if Kamala wins. Because Kamala, she's looking to take some money or some gains from the very rich and corporations and give it to the middle class and the poor. All right. Trump, on the other hand, he wants to cut taxes for all and then boost the U.S. economy. He also wants to do a few other things that's actually going to hurt the weakest groups even more, but people don't seem to care. So what's interesting here, again, long story short, that biggest change on Trump. Now, because he's looking to boost the economy, most likely it's going to cause the stock market to gain, okay? That's what I think. However, there are some problems with his proposals. The ones are universal tariffs. If he introduces that, then it can be really bad, okay? But probably he's not going to do that from day one. Number two, mass deportations. If they start to do that, it's going to be very expensive and it's going to be very difficult. And that again is not really gonna, it's not going to be good, because there is this idea in the Western world that, okay, you have migrations and that, hurts the economy. To some extent, it's not great, but in other places, the migrants actually work. And so what happens, for example, in Europe, and like in UK, for example, where they stopped European economic migrants come and work, these jobs that were then replaced by other foreigners. So it wasn't a situation that just because you stopped certain groups to come to the country, that the native-born English people started to take these jobs, okay? It didn't happen. Like, we still have like thousands of people coming in working in healthcare, for example, and other many times low-paid jobs. So it might look good, but it's not necessarily the best solution here. So we'll see. Now, this is important. The election happens now, but Trump doesn't become or Kamala doesn't become the president until January. So that's when the inauguration date is. So there's gonna be some weeks now where there is still Joe Biden, and many times you'll have a nice little trade, and then when the inauguration starts, that's when the bumpy things happen. So that's something to bear in mind. So with this, in general, I would suggest that we actually look at potentially buying dips in the S&P. That's what I would do. Doesn't mean that you have to do it, but that's what I would do. So resistance is up here. That's the all-time high. If we have a dip because everybody's scared, and you can have a dip, doesn't matter if Trump wins, doesn't matter if Kamala wins, we'll have maybe a dip, and then you're looking at the September lows, that's 8% down, and then you might be looking at the August low, that's 13% down. So around these levels, it would be really interesting. I will be quite surprised if we trade below the opening price of this year, which is at 4,800. But around these levels, I think it's going to be a really interesting idea, and then maybe for this to go up. It could also be, especially if Trump would win, potentially that we have a break to the all-time high, then we break up and then we can go up a bit. But remember, we're already up quite a bit, okay? It's not going to do 30, 40, 50% in 1 year. Those type of returns happen after a major crash. Now, this is support. This is the Euro USD, and so looking at this, you have support down here and resistance up here, okay? So what's interesting here is that the policies that Trump is looking to push through will most likely fed the Federal Reserve to keep interest rates higher. And also the tariffs will boost the dollar as well in the short term. So people say we can go to 0.95 on Trump winning. So on a break to 107.60, can possibly go down to 1.95 by the end of next year. So probably break here, it goes down to 106, and then 105, and maybe lower. On the other hand, if Kamala wins, taxes are gonna go up in 2026, and they will be allowed to keep on cutting rates. So most likely will be above this level, and then we'll be at 110. So the low of last week is very important for FX and Euro USD trading. Now, as for gold prices, in the long run, if interest rates are higher for longer, it is quite likely that gold prices will try to peak. But I don't think they're gonna peak like immediately. I definitely think we can have some profit taking, because if Euro USD is gonna go to 0.95, gold prices are not going to be up here. Okay, so I think one could look at 2,700 around this level is support. Some people might look to buy there, but the better opportunities are maybe at 2,600 around here. So maybe letting it drop here, and then from here, tight stop loss below, and then potentially upwards. And how about Bitcoin? How about crypto? So here, we had an interesting week last week. So we pushed above this double top. It would really look that we're going to go up. There's a channel here. If you draw it here, we're still above that channel breakout. So as long as you trade above $65,000 per coin, we can go up to 82K. But if you look at the weekly candle, it did not look very good. Okay, and I suspect people are very cautious, not looking to buy just yet. But both Kamala and Trump are pro the crypto, with Trump being the most pro. So I think maybe after the election, if we break 74K, that's going to trigger this massive double top, and in that point we might be heading close to 100K. So I would definitely keep an eye on that, and we could potentially, because if people just get scared, maybe trade to 60K or something like this, but we'll be stuck in this big range, and it's probably better to lay low if that were to happen. And that's it, guys. That's really the market update for this week. So it's going to be super interesting, a lot of things to do. If you have any questions, just drop them in the chat. Thank you. Okay, that was it. So we don't have any questions. If you do have questions throughout the week, you're most welcome to just leave them in the comment section, and we'll address them as they arrive at our inbox. Thank you very much, and have a good trading week. Goodbye.